Welcome to Trading Lounge and the Commodity Futures Report for Friday, March the 11th, and we're looking at the US dollar index there, but just want to have a look at the 10-year yields here. So we were considering this particular move up through here as an A wave and a B wave and a C wave here. So it served us well and got us to where we need to get here, but it does appear that we'll be looking for higher ground with all of this. We'll still get a classic trading levels pattern here, the arrival, the reaction, the first high above the level, some sort of correction and then further upside. And the reason I think that is because of the TXY, the 30 yields, 30-year yield things, so treasury. So I can see here with this, it's pretty much got the same pattern, and I'm not an expert in yields and so on, but you know, this, first of all, this move coming down through here appears to be corrective. You could get it as an impulse wave of 1, 2, 3, 4, 5, so not just over just yet for that, but what sort of caught my eye was the 30 years just making a new high here. So because I can see this here as wave 1 here, and then we've got wave 2 here. So this would all be a wave 3 here, and this would be wave 4 and 5. So really, if we take that as as a 5-wave structure here, then we're taking out this top here, then it's opening up a whole new structure at this point. So we can just see here that this is 1 and 2 here, and a third wave going up, and that'll be 1 and 2 and 3 and 4 and 5. So the yield, the US Treasuries will be pushing higher. So they'll take those 10 years with them as well. So I just think that's sort of interesting. And we can compare the gold market against this as well. So we might do that next time round. Take a longer view of that. Now, the US dollar index here, as you know, we've been looking at wave 4 here with 1 and 2, and then 1, 2, 3, 4, and 5 are moving up here. I've counted 1, 2, 3, 4, 5 here, which is fine. I'm okay with that. And I think, I just got to be a bit mindful that wave 4 can go here on this. So, yeah, but that shouldn't bother us at this stage. So we're looking for a wave 4 to pull back. It does look impulsive at first view. But impulsive, we could look at this as 1 from here to here, as 1 and 2 and 3 with 5 waves in at 4 and 5. And we got this move here. So we can look at this as an A wave, a B wave, and a C wave here. Let me just get in here and have a closer look. Yeah, anyway, we know wave 4s can get complicated. There is an A and a B and a C there. We'll just see how this holds up at this point, and we just want to check on this. So we should be getting a new high, it's at 50% rather than 38% at that point, so that's all good. So I think we're on the right track here still, and because we're expecting the euro US dollar to move lower in line with equities, in line with their indices actually, the DAX and the Euro stock and so on. So that's all good at that point. And getting over to the gold market, as I mentioned this morning, we'll probably also put this market in the Australian market because Australia is a commodity country, and gold is all the rage at the moment. So if you're looking for an earlier update, you can just look at the Australian video, which is normally out before 10 o'clock in the morning Sydney time. So here we're looking for, well, first of all, we're looking for a move that's going further up. We're looking for a classic trading levels pattern. So the arrival, the reaction, the first high above the level, and then we're looking for an ABC, and then we get support over here. So currently we're around here. We've got the arrival, the reaction, the first high above the level. So we've got the arrival, the reaction, the first high above the level. We could use this as the ABC pattern here and then just continue straight up from that point, which we talked about this morning. But otherwise, we'll look at this as a B wave moving up here, and then a C wave moving down, and then moving up at that point. Now, all of that said, as we mentioned this morning as well, from the high to the low here, the 50-60% retracement level is here, which in terms of the trading levels, we've got 2,000, which, or 2, I just keep it simple as possible, so major trading level 2 here. Then we got 10, 20 and 30, so that's a subgroup. So if we get support on that, on 230 with a classic trading levels pattern, so a confirmed tested support on that price point to 2030, then we know that we're going to be going higher at that point. So a classic trading levels pattern here for short-term traders would be a trigger to the upside at that point. Okay, so we'll keep an eye on that. But otherwise we'll look for an A wave, a B wave and a C wave here for this, and other commodities are kind of doing the same as well. Iron ore here, we're looking at iron ore from the lows as a daily chart, looking up at 5 waves up here for 1 and ABC back for 2, then up for 1 and back for 2. It's possible we can call this a B wave up here and then look for a C wave over here. That's still haunting in the background. But I think it's a bit of a long shot here. The other haunting aspect about all of this, which is a bit of a truth, is that we have 5 waves here, then we have a correction, and then we have another 5 waves here. So the reality is we could have an A wave, a B wave, and a C wave here, and we've got a top in play, and we come further down here. That's exactly what the CCP would like to do, getting their traders to hammer the market, but they can only do that for a short period of time, and they won't be able to contain it. But I think all of that is wrong, and I think this count is right based on our count with iron ore stocks, Rio, BHP, Vale, Fortescue Metals and so on. So kind of, well, still Fortescue could be, yeah, on the bearish side, but the other ones are all okay in that way. So we'll stick with this story for the time being until proven otherwise. Okay, so platform's just resetting. That brings us into crude oil. So we've got this sort of same thing happening here in terms of a correction. We can go to, well, let's just stay here for a moment as wave 1 and 2 here, and then 1 and 2 here. So we're expecting it to pull back here. Didn't find support on top of group 1, minor group 1 of 10th out of 100, 1. This is a CFD, so it's in decimal points, but yeah, so we're just expecting this to pull back down here. I don't want to short it into this large number. That's not the done thing. There will be support there. There will be vibrations there. We're not going to get really involved in that, but in due course we'll be looking for it to fall into this box here, and we'll be looking for the trade set up at that stage. Now, just going to the monthly chart here for a moment. So this is the pattern here for this. So we're looking at this as wave 1 and 2 here, and then 1 and 2 here for this. So as I've mentioned before, all of this going back to the GFC days, all of this is a corrective pattern. So we'll be taking up that top in due course. There is other ways to count this, of course, but I'll just stay with this one for the time being, and I like this because it's sort of in line with emerging markets. What have we got here? Copper. So with copper here, yesterday we looked at this move up through here that's pulled back 78.6% roughly, the next ratio on the 61.8%, or roughly the square root of 61.8%. But the thing here is that I was a bit perplexed in counting this, and I'm thinking that we could, I mean, obviously it would be a corrective pattern because there's overlapping wave structures in this, because that's 5 waves in here. Right, this move up here overlaps the bottom of this, so it makes it corrective. So we could have this as an A wave, a B wave and a C wave to this point. If we wanted to be a bit philosophical about it, we could actually look at it as wave 1 here and 2 here and 3 here and 4 here and 5 here for that. Yesterday we were looking for the low just to see what would come out of the gates, and it has sort of shaken off the dust a little bit, and and it's starting to move up, and we could view that, obviously we can view it as a corrective pattern because I can see it's got overlapping wave structures to a point, but there's a good case for an impulse wave at that point there as well. Let's just see how this develops a little bit further. No rush to make any sort of big decisions about this just yet, so we can certainly come down to the 61.8% and push up at that point, but even that's not going to give us any answers at this stage. I am just assuming that it's just 1 and 2 at this point, but it could be that this could just be the A wave and ABC for the B wave up here, and then down for the C wave and then up. So I just think we chill on it for a while, and we'll look at, we'll see how that plays out at that point. Alrighty, so nickel, as you know, the LME closed their thing down first for 7 days, and it looked like New York had closed down their markets not yesterday, the day before as well, after the LME did they did the same thing. We have long trades in here starting at the 20-odd thousand point here and here and here and here and here, and we just kept sort of adding to that on the way up through here and counting it and so on, and we've got our stop sitting here. This is where the market is at the moment. So when it reopens, it will probably gap at some point to some point, but 1 is the strongest market number in the market, so whatever happens, it's going to end up being pulled to this number in due course. We're not finished with this trend to the upside. You know, they can only close it for so long. So much for the free world, free markets and so on. But yeah, so nothing we can do about this for a week. So we'll just wait it out. Okay. Uranium's making a nice move. Where did that come from? Just remove that. So from the low here, yeah, look at, I wasn't quite sure the best way. We could use this as wave 1 here and back for wave 2, but we do have 5 waves here, and I kind of needed another wave to finish off this move from B to C. But anyway, still open for argument. This here is 1, 2 and 1 and 2, and now I've pulled this into 1, an A and a B and a C for 2 here for this, and then looking at this as 1 and 2, I need to resolve this here. I could look at it in a couple of different ways. I know markets patterns rather get skewed at large numbers, so this is why we could end up having this little 3-wave move here. So as this develops here, I'll get to know a little bit more and more, because I can know that this is wave 1 and 2 here and here as well. So I've got wave 1 and 2 and 1 and 2 here. I don't know if I've got 1 and I don't know if all that's the same part of the next structure, or this is a bit of a 3rd wave pushing up here, as a 4th wave here with a little ABC. We're going to be pushing up high, and I just wanted to talk about this a little bit. This, you know, when we talk about going from 20, number 2 to number 3 here, then in between the 2 and the 3, there will just be the Fibonacci sequence as 1, 2, 3, 5, and 8. And when we talk about 8, we talk about group 2. Group 2 is 65 and 72, and then we're currently moving into that at the moment. So we can expect the market to vibrate in this space, right? But at the same time, continue to push higher. This little move here is corrective, so that means we'll take out the top, and what that does, very subtly, it puts us into the lower end of group 2, the 65 number as I call it, but in this case 2650. And finding support in here means that it can climb up to the rest of the move here. The 28 will be the strong number that that will play out in terms of holding the market within group 2 for a little while, but all the consolidation in here will eventually become the support for up here in 2 ways, because it will hit 30, it will come back and develop more support here, then push to the upside within group 1, 1, 2 and 3 up here, and then it will come back and it will find all of this here as the support. And that's just the normal pathway for markets to move. So based on this 1 and 2 and 1 and 2 and 1 and 2 and 1 and 2, we should sort of move along here reasonably well. So obviously there's a bit of light coming in for the uranium method of powering things up now that there's energy crisis going on. So that's that, all good there. This is an emerging markets pattern, which is very much like crude and all the rest of it. And, you know, Russia would be in the emerging markets as well. So that's probably why that's pulling back for wave 2 at that point. I'm not that interested in that at the moment. Natural gas, as yesterday you noted that we pulled into the larger triangle pattern that we were looking at. So yeah, look, the A wave here, the B, the C, the D, and then an A, B, C here for the E wave, and then we'll cruise up there. I know we've got some positions in this market. We're going to keep them because there's not a lot of difference between looking at this in terms of an impulse wave to the upside or a triangle. They'll all keep pretty sort of shallow. So what I mean by that is that from this low here to this high, the 61.8% is here, and that's about really it. So that 43.80 at the lower end there, that'll put us into group 2. So 43.72, 43.65 is all in group 2 there. So if you can handle that, well then you're okay at that point. So that's the pattern that we're working through there. Alrighty, I'm going to leave it at that. Enjoy the weekend, and I'll see you in the next video. Cheers.